All right, so a very good morning and a very warm welcome to all of you. Thank you all for taking your time out and joining us on a Saturday. And for this next webinar in the deep dive with IQ Experts free webinar series. Today's topic, as you all know, is on using algorithms to get deeper market insights. And to speak on these topics, we have our distinguished guests, Anindya Banerjee and Prasenjit Biswas with us. So they will take us through this session. So about the speakers, first let me introduce both Anindya and Prasenjit. They are both from Kotak Securities. Anindya has been heading the research desk of Kotak Securities on currency and interest rates for more than a decade. He is widely quoted in the financial media and has a very long track record of analyzing and trading the FICC markets. And further, he has a very keen interest in macroeconomics, data analytics, and system designing using algorithms. Prasenjit is also, as I said, he also is from Kotak Securities, and he works in the derivative research as a derivative research analyst. In his illustrious career spanning over more than 16 years, he has developed his expertise in objective technical analysis and data modeling. He has conceptualized and implemented many models in equity space, especially his work on sentiment analysis, which he likes to call True Breadth Index or TBI, is definitely worth mentioning. So welcome Anindya and Prasenjit to the webinar. Thank you so much for joining in.
Hello everyone.
Right. So before I hand over the session to Prasenjit and Anindya for the talk on the topic, I would like to give a brief on how we would go about in the webinar. Also, all of you would anyway be aware of the most of the technicalities on how we would actually conduct the webinar, but still, it's always good to again mention that. So first of all, again, as you all know, this is like about a webinar where we'll have about an hour of talk, and then it would be followed by the interactive Q&A. But since we have a large audience, for the sake of conducting the webinar in a smooth way, we would not be able to allow the participants to speak up. But nonetheless, we want the webinar to be very interactive, right? So please feel free to type in your questions in the chat window. We have a Q&A session where we would be taking up all the questions after the main session. So we'll take up the questions after the session, but during the webinar or before the webinar, after the webinar, please feel free to type in your questions and we'll take up the webinar. So all participants will be on mute, barring the speaker, and but you can all type in your question in the chat window. So with that, we'll start the session, and I'll hand over the session to Prasenjit to initiate the proceeding.
Sure, thank you. Can you just make me the presenter?
Yes, of course. I've made you the presenter.
Okay, so let me see. Can you see a PPT just to make sure that I am on the right screen?
Yes, absolutely. Your screen is visible. We can see the PPT.
Great. So I'm going to be putting this on a presentation mode, and so we go full screen. So voice clear, video clear, screen is also visible, right?
Absolutely, all clear.
Great. Okay. So basically, I'm very much thankful to Nitish and IQF for giving us this opportunity to speak or share our thoughts on this interesting topic called using algorithms to get deeper market insights. So the idea behind of this webinar was that, we come from a broking background, right? I'm an analyst. Anindya Banerjee is also an analyst looking at the effects. But we have been doing this for quite some time now. It's been years together now. So as we progressed into our careers, we felt that there is a necessity to kind of enhance on your skills. So the concepts that we were using back then, let's say 5 years, 10 years back, they apparently seem to be becoming less effective, right? So I'll just to start with, give you a brief background, like how it started with me. So like from my childhood, I had this bad habit of questioning people and questioning everything that I used to read and learn, and I never used to take things for granted. So when I came to this field of technical analysis, so that's where again the same thing happened. I started to read books, but then I had these questions in my mind, and apart from that, I also have this inquisitive nature. So I would try to think of new ideas and new concepts, and try out and new things. So this was back in 2006 and 7. So back then I did not know any programming language, I did not know Excel, I just had barely any even understanding of the domain itself, which is technical analysis. So in 2008, 9, 10, 11, just time went by, and then I gradually picked up on the subject. I understood the content as well. So then what happened, like I started to visualize things, and I wanted to test things on my own. So I read things, and based on those readings, I could kind of visualize and improvise on those things, and wanted to test my own ideas and see if they are going to give me an edge over others. So the first thing that I did was I started to learn Excel a bit more, right? So Excel, learning Excel, I mean, just about the basic if then else functions and all those. I was like completely a dumb. So I did not know anything about Excel. Back in my MBA days, I did not learn anything on these platforms, and I used to bunk classes. So that was it. So gradually I picked up on the Excel, and I found this to be very interesting because it kind of empowered me to do a lot of things that I could not earlier. So after the point, again in 2015, by the end of kind of 2015, I would say that I was almost doing everything and anything that was possible in Excel. Okay, but I was not able to break that barrier. So I was facing a bottleneck again, because the Excel in itself is such that it has a limitation of its own. Correct. So I was facing that bottlenecks. For example, I had come up with a logic on Nifty to predict short-term moves based on a swing trading logic, and it required a nesting of about, I think, 9 or 10 levels. So that's when I learned that in Excel you can't go beyond 8 nestings. So that was a bottleneck again. So I had to break my head, and somehow I got through with it. But then that's where I realized that Excel is not going to take me very far. Okay, I was doing almost, as I said, most of the things, but it was not enough. So that's when I again started to learn Visual Basic. So that was my first language to be learned, and again a leap happened. So once I learned this Visual Basic programming, it was like I suddenly became more intelligent. I felt like that I am thinking beyond my abilities. So that was a very massive, I would say, feeling of a power that came to my hand, and that kind of motivated me to go further. So in just a matter of, I think, 6 months and about a year, I was kind of playing around with all sort of data, and I was experimenting 24/7, and I was like feeling that now I can get something. So that's what it is. And then later on Python thing came in. So again, after VB, I felt that okay, now this is a easier language to be learned, and it's very easy because in Visual Basic, again, you have to do a lot of things on your own. You have to think of the logic on your own, right? But the Python thing, it comes with ready-made libraries. You just have to know what is the syntax and all that, and how to use the libraries. That's it. So it is again becoming easier and easier. So that was basically what I had, what I had gone through. I'm sure that Anindya Banerjee had also very similar kind of an experience. Right. So let's just get on with the today's topic. So basically, just to give you an overview of what we have in store today. So we just will start with a basic brief about how what is the need of coding and how the steps are, what is it that is required, where it is important. Then we will actually show you some live practical application of the coding, right, which is where Mr. Anindya Banerjee will show you. and that should give you some idea of the power of programming. And those of you who are new to this field and kind of very early in their career, they should find this very interesting. And even if you are kind of a veteran also, and if you're not using programming, that should spark some interest in this. And that will be followed by how you start and a round of question answer session, right? So basically, to start with, see, any kind of reading that you do, there is a theory written, you read about it, whether it is a technical analysis or a fundamental analysis or anything, right? So there is always an element which is whether this particular concept will work in the instrument that you are trying to trade, in the market that you are trying to trade, correct? For example, something like a candlestick pattern in technical analysis, those things have been, I don't know, I mean, what is the history, maybe 100 years back, right? And they were originated in Japan, correct? So the point here is that I have to know how good they are in today's market, in today's economy in India, after 50-70 years later, and on a completely different asset class, which is, let's say I'm trying to use this on stocks or on maybe an index future. So I have to know whether this is actually working or not, right? The second point could be that I have a lot of free flowing ideas coming into my mind, and I want to test my ideas. I want to see that if I can, get some kind of edge. If I'm looking at the market from a different perspective or slightly different, tool that I have, which can give me a slight edge over others, is what is the key for winning as a trader or maybe as an analyst, right? So everything starts with a observation and conceptualization, that you have an idea in mind. Okay, you feel that, okay, this is how things work and this is what I want to test, correct? So the second step brings up is comes up is data. So you have an idea in mind, now you need data to validate that idea. And where do you source it, correct? The third point will be, after you have sourced the data, to crunch numbers. So that's where you want to crunch your numbers, whether it is an Excel or some kind of a programming language. You want to crunch numbers because you want to have a visual inspection of the data set that you are trying to look at. So after data crunching, you get a structured output, so that helps you in a visualization of the data and parallelly to analyze the results, correct? And eventually what leads to all this is a validation of your idea or your theory or your hypothesis of whether this concept works or not. And that is where I think the real edge comes from, right? Okay, now to explain what I just said, we will briefly take you through few examples. I mean, these are not examples which we are like kind of saying that this is what it works, but this is just an just to give you an idea how programming can help you to apply it on a real market data, correct? So we will use 4-5 examples basically, which is where the first one will be to show you how we can use coding to analyze an open interest and price behavior and create a timeline out of it, correct? So there's a concept in derivative analysis which is like long build up, short build up, unwinds and all that. So we will look at that. Then we will see about market breadth. So I have an idea and I want to see that, okay, if say X number of stocks are above a particular moving average, then I feel that market is bullish. Okay, so I will choose an random, say, exponential moving average, and I'll try to see how it looks like that on different days, in a timeline, like how many stocks were above a particular moving average. So does it reveal any kind of information or not, right? Third is what many will be interested in, like a scanner. So this is what every trader or any analyst they find this to be very handy, because finding new stocks every day is a pain, right? If you are a short-term trader, you will understand what I'm trying to say. Even the intraday guys will appreciate more. So a scanner definitely helps us to be more efficient, and it allows us to capture the opportunities at the right time, because in short-term trading and intraday trading, timing is everything. If you missed out, you missed out. And fourth will be just to kind of show you how even you can design reports, right, by few lines of codes. So this is what we have. So firstly, I will take up the price versus open interest analysis. Now here the motive is to create a historic timeline of FNO build up and unwind data and see whether it has any predictive ability or not, right? So we all know that if the open interest goes up and the price is going up, it's a long build up, right? But have you ever tested it? Does it really have any predictive ability or not? So if I want to do that, what will be my first step? To create a data set, right? If not for 10 years, 15 years, at least for about 3-4 years or 5 years, correct? So that's what we intend to do. And I'll see that in case if I did not know programming, how far can I go in Excel, correct? So at a concept level, basically this is just for the benefit of people who are directly not from the stock markets. The concept is that if a stock price goes up and if the future contract open interest for that underlying asset also goes up, it is called a long build up, which you can see on the top right hand corner of your screen. Price going up, open interest going up. So it's a long build up. Similarly, if the open interest goes up but the price have gone down, so it's a short build up, correct? And for the rest of the two on the left hand side, here both open interest in both the cases the open interest is going down, but in the upper left, which is short cover, the open interest goes down but the price is going up. So that's a short covering. And similarly, if the open interest goes down and the price is also going down, so that's like a long unwind, because like bets are getting closed, correct? So these are the basic metrics which I'm sure most of you are aware. Now if I want to think of it in terms of a pseudo logic, maybe into an Excel file or maybe some kind of a programming language, then what is my first step? First step is to think of a logical step by step as a process. So this is what it is. So on the left hand side of your screen, as you can see under logic, that if the current price is greater than the previous price, okay, so which means the underlying price has gone up as compared to yesterday. Now two things can happen. So the next line is if current y is greater than y, so which means in the first condition I have a price going up and the open interest is also going up. So that's where I say that it's a long build up. Similarly, if the open interest went down, because let's say there is a kind of a unwinding that is happening, but just because the prices are going up and your open interest is going down, it's a short covering. Now coming to the bottom section, which is the else section. So else means that the current price is less than yesterday's price. So the upper section was about where the price was above the yesterday's price. Now the lower section is where the price is below yesterday's price. Now again, two things can happen. OI goes up, OI goes down. So if OI goes up, it's a short build up, and if OI goes down, it's a short unwind, correct? So this is what we all understand. But now let's say if this is my logic, what can I do in Excel, right? So this is just a screenshot to show you that how far can I go in Excel. Yes, I can just copy the Bhav copy data and get the raw data from NSE and put them into a pivot table, and I can exactly get this sort of an Excel sheet in front of me. As you can see, there is a basic formula that I have written in Excel, and it is actually giving me a very nice kind of distribution what stocks are in which category. So at the extreme right, you can also see that it is a data for 22nd July, and the total number of long build-ups were 56, short coverings were 33, and so on and so forth, out of a total basket of 196 stocks in FNO back then. Now the issue here is that this is all fine. I mean, I got this data for this particular day. You can use pivot tables, you can do whatever you want, you can do it manually if it is all about one particular day. Maybe if you have a template like this, you can easily calculate for about the last 10 days. But if you're trying to do some analysis, 10 days data is actually not going to take you anywhere, right? So we need much more data, a longer data, and then how do I go about it? So this is where I'm stuck, because in Excel I cannot download the data for the last 10 years or 5 years, or forget about 10 years, even for 1 year it is like 250 files, and it takes about maybe at least a minute to get all that thing done, to download the file only itself. And to complete this process, it will take nothing less than 10 minutes. I take 10 minutes at least to generate this kind of a report. So even if I was trying to create a timeline manually, it would take, I don't know, it would take years together. So that's where we drop the idea of doing any primary research because of our handicap uh, of the ability to deal with large data sets. Maybe a day or two we can handle, but not with a long series of data. So that's where our kind of beliefs and whatever we have read, it all turns into a religion where we don't question, we just assume that it is going to be working fine, right? Now, so this is what I need. I need a historic trail. I want to fill this entire sheet. I want this not only from 14th June, I want this to be done from maybe whatever, like 2021 or 2015, whatever. And I want to see how it has behaved with respect to the index. So I want to kind of get a plot on the right hand side of your screen, as you can see, something like that. I want to visualize this data, something like this. So maybe, as I said, maybe for 10 days you can do it in Excel, but not for 10 years. So this is a problem that I'm facing. Second is like, I want to create a breadth indicator, which is where, as I said, I feel that, let's say there is a particular day moving average, let's say 50-day moving average, and I feel that if a stock is above of it, this 50-day moving average, the stock is in uptrend, and if it is below that, it is in downtrend. Now, I'm not going to look at any individual stock in isolation. So what I'm going to do is, I'm going to look at the whole, let's say the NSE FNO basket in totality, or the list of 200 stocks in totality, and then find the count of stocks for each and every day, like how many were in uptrend based on this criteria, and see if it reveals any kind of information which has any predictability or not. So this is what I just want to see how it looks like. Whether it works or not, that's a secondary question. I just want to see how it would turn out. Third, I mean, just to give you an idea how the pseudo could look like. So it is a very simple, straightforward logic. If the current price is greater than some X-period moving average, it is up. If it is below, it is down. But I want this process to be repeated again and again for, say, last 2 years or 3 years or 10 years, correct? So that I get again a timeline of this data set, and that I want to correlate with the index move or the general market move. Now the scanner, the third part. So this is where, again, let's say I have an idea where I feel that this MACD is a good indicator and I love RSI. Okay, so I'm going to club these two things together and I'm going to create a scanner out of it. How? Simple logic, that if the MACD, which is the 12, 26 and 9, is greater than 0, and if the RSI is also above 14, I mean 14 period RSI is also above 60. So that is kind of a situation where I know that the stock is in uptrend because of the MACD, and it is also in momentum because of the high RSI rating above 60, correct? So because if you ignore the RSI part, then what will happen is that maybe a stock could just give you a flip-flop between that MACD above 0, below 0, above 0, below 0, correct? So maybe the stock is doing a sideways move and you are getting a buy sell signal every next day, correct? So just to avoid that, I'm using RSI, and I believe that using RSI will ensure that I don't fall prey to this whipsaws. So using MACD and RSI in this combination is a bullish momentum. Similarly, for the bearish momentum, if the MACD is negative and I have a low RSI reading, which is like 14 period RSI below 40, so that's like the start of a bearish momentum. And if a stock does not satisfy any of the criteria, I will say that it is a useless stock and it is in neutral category. I don't have any view on that, correct? So this is what is about a scanner, a basic scanner. Of course, you can improvise and you can have your own scanners. Now, the fourth part is, especially for all those people who are from industry like us, they will be able to relate that there are a lot of reports that we have to publish, or we publish every day, and publishing a report is actually a pain in the wrong place. And now we want to get rid of this cumbersome process, and we want this to be automated. But I can use Excel only to a point, not beyond a point, correct? So maybe let's say I'm a derivative analyst and I'm going to show you just a sample this thing. Let's say every day we have to publish a derivative summary. Okay, now I can do it manually. I can download the Bhav copy, paste it, do that pivot table, refresh here and there, copy, paste, and finally I will get some kind of a report. And it will take nothing less than and a half an hour every day. So that's a sheer wastage of time. Now, those who don't know Excel, even they feel that it is half an hour is also very less. But once you learn programming, half an hour is for this kind of a job is like eons. Okay, so let's say if I want to create a summary like this, so I want this to be done automatically. I don't want to do this manually. So these are basically my problem statements. So now we will see that how, if I knew programming, how this would have helped me. Okay, because with Excel I can only reach to a point. So I'll just request Anindya Banerjee to show us how things are done in the live market and how you are doing it. So over to you, Anindya.
Yes, can you make me the presenter?
Oh yes, yes. Just a minute.
Make the Anindya Banerjee presenter one.
Just a minute.
Let me do it.
Okay.
I presume you all can see my screen, right?
Yes, Anindya, we can see your screen.
And I am audible as well.
Loud and clear.
So namaskar and a very good afternoon to all of you. And thanks IQF for having us here. Now, Prasenjit actually outlined it quite nicely. Means what is the motivation behind the need to know programming, right? So if I give an example, let's say it's a Saturday morning or Sunday शाम को, और आपके पास एक idea है, or you just have a question in your mind. The question can be कि जो derivative positioning है equity market में, क्योंकि last एक महीना में Nifty or the entire equity market has rallied a lot. So what is the derivative positioning in the market? क्योंकि जो large operators है, जो large speculators है, SPIs है, they take a lot of positioning in the derivatives market. But you have to know quantitatively or objectively कि क्या positioning. वो एक question हो सकता है. The second question can be that how is the breadth in the equity market? Again, breadth is important indicator because we are just not tracking the Nifty, but also the entire market as a whole. And it could be also that which stocks are in a strong trend and momentum. Or interestingly, it's just not the stock market. ये हो सकता है कि USD INR is close to an all-time high. So ये साल, what has been yeah, sorry for the glitch. So exactly the question which can come to mind is let's say the Indian rupee is at an all-time low against the dollar, which means the USD INR is close to an all-time high. So how has the Indian rupee fared against a basket of currencies? Matlab, Indian rupee, is it the outlier, or is it a strong currency in the world? Or you just have an idea as to a moving average crossover? Let's say 2 moving averages, 3 moving averages, n number of moving averages. Will that work? In which kind of instruments it has worked across hundreds of instruments across markets, and what combinations have worked? So these are the ideas. Now, how do you know which ideas are interesting, can make you money, can generate interesting, insightful results, and which should be just sent into the cold storage because they don't have much value? When you are trying to basically move from idea to actually implementation, you will face 2 problems. Problem number 1 is the financial data has 2 challenges. Challenge number 1 is the variety of data, and challenge number 2 is the volume of data. Because financial data is simple, but these 2 challenges are the reasons why a lot of people don't undertake in financial data analysis or some kind of a signal, objective signal generation for trading. If you are trying to do it manually, it's nearly impossible. If you are trying to use Excel, you will be getting that much, not able to do complete justice. So you need to know programming, and programming is easy, right? So I'll give you a demonstration of some of the ideas. Now, these are ideas. These are not demonstrations to show that they work or they don't work. These are simply, you have an idea, you want to test it. What are the challenges which you will fix? So I'll go back to the slide which Prasenjit covered, is that what is the process? The first one, ideation. You have an idea, you have a question. Then comes what kind of data that you need. Once you have the data, now this once you have the data, this phrase is very dangerous, because when we are doing things manually, once we have the data is pretty easy to understand. But when you have to basically handle a large volume of data and make the computer understand it automatically, this is a huge step in itself, right? So the second important step is data selection. Then comes, once you have done that, once you have done the cleaning on the data, then comes the crunching. You have an idea, you are trying to convert that to a particular logic, and then you are crunching that raw data, and then then you come to a structured output, which you can do an analysis by either visualizing it, or you can convert it into simple numbers, and then you know how good was your idea or what is the answer to your question. So with this, I'll switch to my Jupyter notebook. So this is an apt quote. Means, why should you know programming? No, none other than Steve Jobs actually outlined it so beautiful, that it's true that programming helps you to think. And this I can vouch, because I was a non-programmer even 12 months back, right? So all this stuff which I'm going to show you, you would think that how is it possible to write so long lines of code? But just a year back, I was exactly where you are today. In fact, I remember I had attended one webinar of IQF itself 1 year back as an audience, just like where you are today. And I was going through the various lines of code that were getting demonstrated and thinking, can I really do it? And today, here I am actually doing the presentation. So I will not take you through the exact lines of code, because that's not needed. See, coding is like learning how to drive a car, right? And here there are two important things. Which car you drive, that is your choice. But once you know how to drive a car, you can drive a Ferrari, you can drive an Omni, you can drive even any sedan. So it is the common part is knowing how to program. So then the programming languages, whether you use Python, you use C++, Java, whatever name you love, you just put it, all are similar. The syntaxes are different. But once you know how to code in any language, I can say with some authority that you will be able to learn other languages quite easily. It's just like knowing how to drive a car. You just have to know how to drive a car. Then switching models is not that tough. So here we'll be demonstrating the entire thing through Python. Now, why Python? Python is quite popular as a programming language, especially in finance, and it is easier to learn, I would say, from my experience. So if I have to put a timeline, I would say anywhere between a couple of months to a few months can teach you at least that much of Python that you can actually start testing your ideas. And then you have the whole internet. In fact, all programmers in the world use Google. In fact, the best of the programmers who are paid millions of dollars, they use Google to find syntaxes. So it's not that you have to store all the syntaxes in your brain. You just have to get into the mode of programming. Once your brain starts to think around how to program, then it becomes very easy. And this, again, I'm saying from my own experience. I'm not just dictating some kind of a theoretical stuff out of a book, because as I said, 12 months back, I was exactly where you are today. So this is just a few steps of importing the libraries. In fact, libraries are basically what makes Python so powerful. So in simple English, libraries are like automated code. So somebody has created that those lines of code and given it to you free of cost, which you can use for your own processing. So again, these are stuffs. Once you start learning Python, it becomes very easy to understand what I'm saying. So don't get too bogged down by the lines of code. Just focus on the magic, because when you don't know programming, it will seem like magic. Once you know programming, it will become just science. So this is the first step, getting that data. So where do I get the data? I don't want to pay for the data because I want it free. So I have my first choice will be to look for sources which are free. So NSE offers you Copy, free of cost, to be downloaded, right? But what is the problem? If you want to do it manually, you may go that much by downloading 6 months, 8 months. You really persevere a year. But if I ask you to download every day for the last 10 years manually, oh, it's too boring. Because see, where a computer excels over a human being is that it can repeat a task ad infinitum, and it can do it at an alarming speed. These are the only two qualities of a computer, that it can do it ad infinitum at an alarming speed, and that's what we will put to use. So I'll give you a demonstration of how this can be done. I've written this line of code. Let's say I want to download the Copy for 18th August. And here it happens, from 18th and 19th, it automatically downloads, right? It downloads in my particular folder, which I'm not getting into that, because here I'm not teaching you how to code in Python. I'm just giving you the flow of programming and the magic of programming. Then we do a file cleaning. If you remember, we first need the raw data, then we clean the data, etc. And then my action begins. Action, we'll do demonstration of various kinds of ideas or questions that has just come to my mind on a Saturday morning, right? So let's say I want to understand what has been the derivative positioning for one day, right? On 19th, what was the derivative positioning? And after writing a few lines of code, voila, here comes the output across 194 stocks. How much was the time taken? 0.01 minutes, almost like a blink of an eye. It was there. Just imagine it crunched. How much data does one Excel file have? I'll show you. So this is a Copy, a typical Copy. It has 64,289 rows into 15 columns, and the sum is, wow, the number of data points is into lakhs if you multiply the number of columns into rows. So all this is crunched in just a blink of an eye. You want to do this manually, and this you can run n number of times. It's just that on Tuesday I want to run the data for Monday. All I have to do is just change just one part of the code, because everything else is going to be constant, and it will run automatically every time. Just I need is what? I need the internet connection and electricity. That's all. Now, if I want to export that data frame into an Excel, so this is the data frame I wanted in an Excel. Very easy. Just see one line of code. Now, let's say I want to create. This was fine for a particular day, but I want to know historically over the past 18 months, every day, what has been the long build-up, the number of stocks in long build-up, in short build-up, in short covering, in long liquidation. Just imagine, not one day, nearly 65,000 or 65,000 rows into 15 columns. that much of data just for 1 day of file. Now you have to do it for 18 months. Whoa, that's huge. Now ask a computer how long it takes. All this, and we here use Yahoo API as well. So Yahoo Finance we use. So that is the power of Python. And here is the output. How much time it took? 1.6 minutes. And let's plot this. Yeah, here it is. So red denotes short buildup, blue denotes long buildup, and in between are the unwinding. All this you can see if you want to plot. So visualization happens, number crunching happens. Here we have only shown from the 1st of July because just for visualization, if I take more data, it will all get cramped. So this is, again, this is not let's say a demonstration of whether this works or not, but a demonstration of how you can actually convert your idea into something which you can then use to answer the question whether this idea was fantastic or this idea was a garbage. Just imagine how much volume of data it crunched. Millions in just what? 1.6 minutes, and you had this output. Let's do another one. Here what I'm going to do is take 18 months of data, Bhav copies, and then basically create a master data frame, which means it's going to do this. It's going to basically go through 386, nearly 400 million data points, and it crunched it in less than a minute. So just imagine if just doing this on Excel, even if you know even the most advanced forms of Excel, you may know the advanced forms of Excel, but Excel was not designed to handle this. So bad news from the programmers from Microsoft. So if you know Python, which is simple to learn, this you can crunch. Now I'll tell you how this particular data frame could be used to find out a flaw in the Bhav copy. We'll come to that in some time. Now I want to create breadth indicators. What are our breadth indicators? Here I want to know that let's take a N day average. So N day, what comes to my mind? Okay, a quarter average, which is 63-day exponential moving average. So how many stocks in the FNO is above the 63-day average and how many are below? And I want to know that historically. Try that manually. You'll give up. So all this few lines of code and voila, I have it. Magic again. So this is the blue line is basically the percentage of stocks which are above the 63-day average. Now, why did I pick 63? Suddenly the number flashed in my mind. It came from Cosmos. I'm just joking. It's just you can test that with any number. My only logic of picking 63 was that 63 days in a quarter, so I just wanted to take that. It's not a demonstration of quality of a particular average, just to show that if you have an idea how fast you can test. You don't have to not test it because you don't have the ability to code. You just know how to code and you can do these kind of tests. Another example. Now this is a little more sophisticated, but before we go into trend and momentum, I'll show you a live demonstration of a flaw of a Bhav copy. See, the biggest flaw of a Bhav copy, or when you're using a Bhav copy data for equity, not for currency, for equity, it is not adjusted for corporate action. So that's why these things you have to know. So when you are becoming an algorithmic trader, or you are getting into financial data science, etc., you need to know all aspects of data. And one of the most important aspects of the data is what kind of data that you are getting. Is it good quality data, or will it actually spoil your analysis? So for example, this red line is of Aarti Industries. It is taken from the Bhav copy. So all the Bhav copies which I had crunched previously from 2021 Jan, it shows this as if you take this data, it will show on this particular day in July of 2021, Aarti Industries had become a DHFL, but that's not the case. There was a corporate action, possibly a split, because when you take the same data of Aarti Industries from Yahoo Finance or using the Yahoo Finance API, just look at the power. You are using an API, which is basically means that you are using an automated interface of Yahoo Finance to download the data from its server automatically for n number of instruments. Here I downloaded for the whole 200 odd FNO stocks. So this now clearly shows. So these are the things which we have to understand about the source of the data, the issues with that source, and etc. And all these things I can say will come to you because, as I said, 12 months back, I was just a complete novice in this. Now, coming to our trend and momentum. So again, this is not a demonstration of a particular system. This is just to demonstrate the power of testing an idea. I've used the MACD and I've used the standard here, 12.26.9. Now, you can keep tweaking it, make it 10, 5, 2, whatever suits you, and you can in fact do crunching as to which combination works best to define a trend. So I've used the standard textbook MACD combinations, and I've taken that as a proxy of trend, and I've done that across the 200 stocks across a time frame since end of December 2020. Now I've used the RSI to demonstrate strength in the trend, and then what I have done is basically combine the two and create a scorecard. Here the scorecard is not important. Here what's important is the idea in my mind was that if which stocks out of the 200 are in an uptrend and which stocks are in a downtrend. Now I should be able to define what is an uptrend and what is a downtrend, and so I've used the MACD to define it. MACD above 0 is an uptrend, MACD below the 0, so MACD histogram below 0 is a downtrend. And then I want to know which stocks in a trend are in a strong trend, which means if it's in an uptrend, it should have a very strong positive momentum. If it's in a downtrend, it should have a very strong negative momentum, because I want to bet on the fastest horse. That's the whole idea as an individual trader. So I use the RSI, I combine the RSI. So RSI give me the score on momentum. So RSI above 60 for a stock with a positive MACD histogram is a stock which has an upward trend and a very strong upward momentum. And MACD below 0, RSI below 40 is a stock with a downward trend and a very strong downward momentum. And then I've done a bit of scoring here and there, and you get the whole list. So you can scan. Again, you can export this to an Excel and do the scanning which stocks are in strong trend which you want to. Then you can get into the chart and see if some kind of a chart pattern is forming or not. And I've gone one step ahead and created a breadth indicator out of that, because if you can combine them every day and create a breadth, which stocks, if the entire market is in a bullish phase, then most of the stocks in the FNO space should be in a strong uptrend, not just uptrend, strong uptrend. If it's not, then it could be a problem. This is just an idea. Again, this is not a test of the idea. This is just an idea I have, a hypothesis. Is it nonsense or is it sense? So I just plotted it, few lines of code, and the magic happens, right? So against the Nifty, the trend momentum score. So trend momentum score, in fact, there was, again, when we are doing technical analysis presentation, we always love to point out where it worked, right? So I'll be as shameful as that and do the same crime by pointing out where it exactly worked. So in this bottom, there was a bullish divergence. Wow. Again, this is not a demonstration of the quality of the system, but it is a sensible system. But you have to always do more testing to figure out which combination, which momentum indicators and trending indicators which you will use. But these are only possible if you know programming, and it is easy to learn. All about equity. This last example is from the currency market, because I'm from the currency market. If I don't do an example from the currency market, it will be a gross injustice. So here you have an idea. Let's say I said USD/INR is at an all-time high, trading close to 80. The question that comes to mind this year, that means since December 31st of 2021 till now, till the last Friday, that's 19th, how much has rupee depreciated or appreciated against the dollar, and is rupee the outlier? Matlab, yes, is a weakest currency, strongest currency on average perform. Agar janna hai, I need to, so I compared against 26 currency pairs. 26. Doing it manually, you will just give it up. You just look at 2 or 3 currencies manually and then just give it up, right? So if I do this, this is the output. Simple. Ranking happens here. USD/INR is a slight outperformer because it's 11th rank against 26, TRY being the worst, depreciating 36% against the dollar. How beautifully the output comes. So this was to show basically how the power of programming can help you to move from ideation into implementation. So with this, I hand over the floor to Prasenjit.
Oh, thank you so much. I mean, it was so wonderful. I hope our audience must have got some idea about how things work. And with this, I just thought of showing something very interesting on the derivative analytics part as well. So, am I the presenter? Just yes, I think I am the presenter. So, what I'll do is I'll just show you. Just a minute. Okay, so I'll just show you how we can actually create a derivative summary. Just keeping it very simple. This is something like people like me will be able to relate, who have to create some sort of a report, a derivative report, a cash market report, all sorts of reports, and we do it every day. Correct. So those of you who have been doing or compiling these derivatives reports every day, for them specially, I just want to show them, like, we used to do this back then when we did not have an automation, and we used to do this using only Excel. I think that's what most of the people do, and used to take nothing less than 20-30 minutes, right, depending on your pace. And if you've been doing it for a very long time, the initial 6 months when you join a research team, you find it is very interesting, right? And then after 1 year down the line, you feel okay, fine, it's a job I have to do. But then if you have to do it this for the 5 years, 10 years down the line, you will feel that it's a very irritating task that you have to do every day. Correct. So I'm just going to pull off the data from yesterday itself, and for the simplicity's sake, I've just downloaded the bhav copy or the raw NAC data file from the NAC site itself, and this is where can you see my screen? I think you can see my Excel file and my the folders and all that.
Yes, we can see.
Yes, we can.
Okay, great. Yes. So I'm just going to open up this 19th August FNO bhav copy file, and Control A, Control C, and I'm just going to paste it in this bhav copy file sheet just on your clock. How much time does it take? Control V. And also I need this participant wise data, so just going to close this. Okay, and now I'm going to pull up the participant wise data, which is here, and just Control C, and again Control V, right? And now all that I have to do is generate report. Now you just see how much time does it take. 3, 4, 5, 6, 7, 8, 9, 10. We are almost done. 12, 13, 14, 15, 16, 17, 18, 19, 20. Correct? So in just a matter of, I think, 30 seconds, it will be done. So we are done with the report. So this is where I get a summary of all the unstructured data into a structured format. You see, this is where is the open interest distribution, and I get the PCR. Let me just make it bigger for you. I think, is this file visible at this resolution?
Yes.
Okay.
Yes.
So here we go. So we have open interest distribution for Nifty, a basic PCR data. The stocks which gained open interest, the stocks which lost open interest. This is where it is, and then this is where the maximum commitment happened, like the stocks or the contracts where the maximum open interest built up, as well as the premium inflow was seen. So this is where the bets were added. So now if I just put this all together into a nice report, so this is how it is going to look like. You see, my report is ready. So it just took about how much, from data downloading to compiling this to a report. Now this is like a complete report in itself. Let me show you like this. Let me make it. Yes. So you see, we have a graph showing here the open interest concentration for Nifty and Bank Nifty. Then we have foreign institutional activity report here. Then the monthly PCR, how it worked. Then the stocks which gained open interest in the future contracts and the commitments. So this is something which is, I find very handy because this is a process that we have to do it every day, and it's just a matter of, like, I think not more than 5 minutes it would take, and the life has become so much easier. So this is what I just wanted to demonstrate in terms of how even you can use coding for building reports. So now with this, let's move on to how coding can help. So just to give you a summary, I'm on full screen meet mode. Okay. So basically, if you look at the advantages of coding, so first would be like, you create different type of data analytics. You can create a lot of analytics, lot of raw ideas keep on coming to our mind. The only handicap is that we are not able to deal with large amount of data, and if that is the case, then we simply drop the idea itself. Correct. For example, if I ask you to create a zigzag, or let's say how much S&P or maybe Nifty can go up without giving a 10% correction. If my question is how much a particular index can go up by 10%, I mean by whatever percent without giving a 10% correction. So if this is what I want to know, this is like a primary research. You can't find this answer while googling. You can't find this on internet, right? So this is where you can simply write a code and you can actually get that thing done. So I can show you, I have this file. This was my first project that I did. Okay, so it was very few simple. Let me show you the code quickly. I'll just show you the code since I think we have about a few minutes of time. So okay, here it goes. Okay, I'm so sorry, I just did not prepare this. Okay, so now this one. This one. Okay, so basically what this program file does is it will calculate the zigzags in the data. So let's say if you feed in the data, okay, I have fed in the data right from 2004, the index data. Now I want to know how much market can kind of move in any particular direction without giving an X% correction. So I'll just clear this data for you. Enable macro. Okay, so now I'm putting in a filter. Let's say 10%. So it is 10%. So noise filter is 10%, which means this algorithm is going to ignore any move which is below 10%, and it will find out how much a trend has continued, whether up or down, without giving a contra 10% move. Okay, so this is what we want to know. So I'm going to just run this program, and it's going to generate the report. So it's just going to take a while. There's a parallel Excel file open, so it's just taking a bit longer. But this sort of an algorithm can give you an idea about like a distribution of how things have worked on index, correct? So this is what it is. So the zigzag generator is ready, and I have the data in front of me. Now with this, if you can see, I'll just pull off the latest data, and it is not fully updated because I have the data only up till 5th of August. So obviously markets made a high after that, but to whatever point the markets made this high, so it is recording all the zigzags which were more than 10%. Okay, so as you can see, the last low that was made was on 17th June 2022, and the low was 15,183, correct? And this low was preceded by a fall from 18,114. So this fall was like a 16.18% fall. Now up till 4th August, the markets made a high of 17,490. So this rally was again like a 15% rally without a 10% correction. So with this kind of a data I have in place, I can now visualize what was the distribution. So this is my distribution of how much markets can go up. So if I just ask you a probabilistic question, how much markets can go up without giving a 10% correction? So you have the answer ready here. So there are total 4,600 data points that I analyzed, and count of swings was 102. So there were 102 zigzags. Okay, and you see the standard deviation is 26%, which means with one standard deviation umbrella, the markets without a 10% correction can go up by 26%. Correct. So these are the things that gives you I would say some kind of an edge in terms of thinking in terms of probabilities, because trading is all about probability. Stock market in itself is about probabilities. So you have data which is kind of giving you an edge in terms of probabilistic nature of how things are working. So it's going to be a big advantage. So this was the whole point in showing you this Excel. Now I'll just show you the code behind this. Okay, so I'm just going to open this macro file, and okay, just a minute. Zigzag. Okay, so this is where you can see the line of codes. So this is a basic program that I had written when I did not know programming actually. So this was way back, I think when I was starting in 2015. So this was my first, so to say, VV project, a real life project. And you see the codes are not much, there are few basic if then else functions, and you just have to be imaginative enough what you want to kind of create. So as you can see, like this is an input box, simple things. Input box is where it was asking like what percentage of noise you want. So I had put in that 10% 0.10, right? So this is where the code is, it is seeking a value from the user. So you can use these sort of simple codes, and you can create such powerful insights into the data. So now going back to the presentation once again. So data analytics, what I was talking about, right? Then the next thing is that you can backtest, you can validate your ideas. So back testing and validation is a very important ingredient, I would say, because see, there is a saying in the market that why did you should maintain discipline? Why did you not maintain a discipline? So my point is that my experience has been like, if I do not have a concrete rule which I know for sure how good and how bad it is, then the question of maintaining discipline doesn't come. It's like, if I know that a rule, if the stop loss is triggered, then it is better to exit, because my historical data says that it is better to exit, and if I hold on, it's going to be detrimental. Correct? If I know with some kind of data backing, then that's where my confidence or that discipline factor will come in, where I know that yes, it is better to close the trade because the historical data says so, right? And then we have this itch of booking profits, and again, if the historical data says that no, this is what your target is and this is how you should hold on to your positions, then that will actually allow me to hold on to my positions. Maintaining discipline is not that easy in the markets are very dynamic, it changes every day, and there is so much of volatility every now and then. So you always second guess your logic, you always second guess your ideas. Correct? So if you have a rule or a foundation built on solid ground, you are like a rock solid man. You have a backing behind you. So therefore, data validation, backtesting, these things are very important. Then of course, as I showed you, research reports, you can use algorithms to create research reports. Visualization data is again a very important thing, because the first step before analyzing anything, getting into much deeper larger data or deeper things, is to visualize the data first. Any raw idea you pick and you just write few lines of code, you have the data in front of you, like Anindya showed you how you could create that open interest data for the past few months, and in just a matter of no time. I'm sure that he would not have taken to write that code more than few hours, right? Despite his office engagements and commitments. So data visualization is very important. Then process automation. So let's say even certain things that are done every day, correct? So you want them to be put into a process together, write few lines of code again, and you just run the code and the results are ready. And the final point is algo trading. So nowadays, like, it has become so very powerful and popular, this trading using algorithms, because it has so many advantages. Now let me just briefly discuss about this also. So basically, if I am someone who has an understanding of the financial markets, okay, and I could be someone who knows coding, and I could be someone who doesn't know financial markets and neither coding, and I'm just a pure mathematician or a statistician, right? Now, when you club all these things together, all these three angles together in a mix, then what you get, if you're someone who knows financial markets and has interest in maths and has a background in maths and stats, then you can actually conduct some kind of quantitative research as well, right? Second, if you are someone who knows coding, let's say you're from the IT industry, you know coding, but you don't understand financial markets, so then you are just a a programmer, right? But if you know financial markets, then you become someone who is a financial data analytics, because now you can apply your coding skills into financial data analytics. So a lot of reporters, many of the reputed international firms, they all know coding, and they are using these codings into their day-to-day life to create such wonderful research reports. They are all primary research. It's not something that some XYZ company research analyst or any average person would be able to do, because that requires your primary research thing to be done. Like the one I showed you, how much markets can go up without giving a 10% correction. Nobody knows until you have that algorithm with you. Now, if you are a statistician and you know coding, you become a data scientist. But if you are a mix of all these three things, if you know financial markets, if you have a background in bit of maths and stats, you don't have to be an outright mathematician, but you must have a working knowledge of the maths and stats, and then you also have a working knowledge of the coding. Like Anindya showed you, he just learned the programming in Python just a matter of 1 year, right? So that's what he did in just 1 year, and I'm sure that he had his personal as well as professional commitments, and beyond that time he could manage that. So if you are able to mix all these three domains together, then that is the key ingredient of an algo trader. So it's very simple. I would say that if you can, progress with in a structured manner. So advantages of algo trading. So I'm sure again many of you will agree with all the points that I have noted. First of all, it cuts down on emotions. So that is what is the biggest enemy of any trader. Our emotional thing, actually the fear of losing out on profits or the fear of losing out on the losses always take over. Correct. So if I'm using an algorithm, once I have a thought over a particular logic that works in the market, and I have coded it up, and I know that, okay, this is what I want to trade with. I don't want to compromise on the discipline. So you just implement an algorithm, and it can even be used only to generate signals. Maybe the punching of the orders you can do manually if it is not a very high frequency logic. Then maybe you can just use algorithms only to generate signals, not for end-to-end. Of course, you can do that, like from signal generation to order execution, but algo trading doesn't mean that it is fully automated. It may be partial, right? So emotions is what we can do away with. Second, you can use a lot of advanced strategies, correct? Lot of strategies which are otherwise not practically possible for anyone who is doing trading manually. So advanced strategies like gamma scalping and all that, maybe a pair trading at a high frequency, maybe an intraday trading based on order flow. I use a lot of concepts of order flow for intraday trades that I recommend. So those concepts can be automated, and you can get those signals automatically, because even with so much of experience behind me, I still miss out on a lot of opportunities, and at times I actually miscalculate. So once that is coded up into a logic, there is no scope of a mistake. So advanced strategies can also be implemented. It also increases your trading efficiency, like in terms of slippage. Slippage nowadays is a very big factor. Forget about the brokerage part, the charges have reduced, that is there, but even the trading slippage is a big factor, correct? And now markets are gradually becoming more and more efficient. So this slippage is actually going to be a disadvantage for you if you have it, because others are not going to have it. So if you can increase or save that small 0.01% on, let's say, 10 trades, so it is 1% in just 10 trades. And if you're taking, let's say, some 20 trades in a week, just imagine 2% you are saving just by increasing your efficiency. So 2% a month you're just saving, or so to say, you are actually losing on that 2% every month just because of your inefficiency in execution or identification. Then I would say that it creates more opportunities, and it opens up the whole window. You can think of anything, you come up with some innovative idea, and you can put that up, and it will allow you to trade or take those advantages, those opportunities. Parallelly, you can trade so many stocks together, because let's say if I'm looking at a screen, how many stocks can I put into my watch list? Maximum 10, 20, 50. If I'm a superman, maybe 100. But if I'm looking at 100 stocks, I can't really figure out what is happening where. Correct. How many alerts can you actually track, or when will you put the alerts? That is also a manual task. Correct. So tracking so many stocks, if you are again like a short-term trader or an intraday trader or even a lower time scale trader, the opportunities, maybe if there are 10 opportunities based on your logic, then maybe you are only able to tap 1 or 2, because the rest of the 8 or 9 opportunities you just don't see on time. That's it. So lastly, I would also say that it allows you to kind of test your strategies, again back testing that thing. So you are working on a logic which is well tested, and you will simply just not be trading with your money based on some random religious type of theories which we don't question and believe just because it is written in that book. So it has to be something like a 200-day moving average. Let me be blunt. Okay, so something like 200-day moving average. Most of the newcomers in the market I have seen who are early in their career and learning technical analysis, they talk about 200-day moving average, 50-day moving average, then they have EMA and then SMA, and then there is a confusion with the DMA. Right? So they feel that, okay, that 200-day exponential moving average number is something like a sacrosanct number. My question is, have you tested it? Go and test it the way you are trying to use it. I'm not here to trying to say that whether some particular moving average works or not, but I'm just trying to spark your thought in that direction. Start questioning. Whether just because it is written in the book, just because you read it in books and YouTubes and whatnot, it works. No, it is not like that, right? So testing ideas is very important. So these are some of the advantages. I'm sure that you guys can even figure out a lot more advantages. Now, lastly, where to start? Okay, so from my end, I will simply say that learn programming, gain that domain expertise. Of course, you are already gaining that domain expertise. It doesn't happen in a day, but what can happen overnight is the ability to code. That's what you can learn in 3 months. You can read technical analysis books in 3 months, right? You can read few good books in maybe couple of months, maybe 6 months, and you can start implementing them. But to make money out of it, that skill, that experience that you need will only come over a period of time. Correct. So reading books and gaining that domain expertise will keep on happening. Even if you are a fundamental analyst or a quantitative, a mathematician, you will, over a period of time, markets are going to change, and you will keep on coming up with newer and newer ideas, newer observations, newer things. But what should we start today is to learn coding. Python is a good platform, I think, because I was, like, as I said, I was an Excel man, then I turned into a VB man. Now I am trying to be a Python man again. Okay, because it's very easy, right? And that's it. So you start learning programming, domain expert, become a domain expert, and test your ideas. So that's what it is. And how exactly you should start, because it's not going to be equal for everybody, because we all are at a different level in our or stage in our career path. So that would slightly be subjective also, but broadly this is the structure. And to get into further details, I will request actually to come Nitish to talk about all this, and maybe he will be able to guide you better where and how you can start. So over to you, Nitish.
Thanks so much, Prasenjit. Yes, definitely. I'll take it from here. So I'll maybe extend what you have been saying. Thanks so much to you and Anindya for this wonderful thought. It was really a talk rather. It was really insightful. So yes, we'll go to the yeah. After this, we'll have the Q&A session as well. So I'll request all participants to be online. But yes, before that, let me take it from where Prasenjit has left, and let me explain how you can start.
I hope it was not boring.
Oh, no, it was absolutely interesting. Both you and Anindya, your talks were absolutely engrossing, actually. So hope you're all able to see my screen.
Oh, yes.
Very good. Right. So, Prasenjit, yeah, just since you mentioned that I should be able to talk about how one should start. So, and as you rightly said, starting is like relative, because every one of us is at like the different stage of like our career or learning. But in general, if I have to talk about somebody who is starting out and in a fresh into the field of trading or algorithmic trading, so you have to take care of two things. One is, of course, the domain knowledge, and the domain knowledge. By domain knowledge, you mean that I mean that like the knowledge about the market, how you analyze the market. It may be technical analysis, fundamental analysis, quantitative analysis, quantitative research. I mean, a lot of us nowadays use machine learning as well. So those are the domain side of it. And second is, of course, to do all this, to do all algorithmic trading, the second important aspect is like the programming side, as both Prasenjit and Anindya elaborated during today's talk, right? So one side is the domain, which is something you can learn from depending on where you want to start with. You want to start learning technical analysis. A lot of courses are there where you can start technical analysis, learning technical analysis. You can if you want to be a fundamental analyst actually, then you can start by doing general finance courses. And then, of course, things like CFA and all would help you in like gaining advanced knowledge in this financial analysis side. I mean, if you want to go into the quantitative side, of course, I mean, then you come from a different kind of background. You build a first background in like deep mathematics, statistics, and then probably you do uh, other courses related to financial engineering, quantitative finance. If you want to learn about data science, there are plethora of courses in data science and all that. So that's about the domain side. But if you want to learn all this in a structured way, wherein actually you want to go directly into algorithmic trading, no matter what stage of your career is like. So first thing is like you learn the programming side. You can learn it either separately, or you may learn it in like a one single structured course, which actually can enable you to smoothen your or like fasten your journey of learning, right? So for example, I mean, we do also have courses in algorithmic trading which takes care from absolute basics. So we meaning, I mean, before we go into that description, so maybe I'll give a little bit introduction about ourselves. So I'm from the Indian Institute of Quantitative Finance, and we are the oldest quant finance institute in India. We have been uh, doing education and training in the areas of quantitative finance and financial engineering, risk management, quantitative algorithmic trading, and artificial intelligence and machine learning. Also, we use in our courses. We are coming up with specialized courses in this fields of machine learning and all that. So we have been doing courses in this fields for more than 12 years now. And we all these 12 years, we have been promoting this field of financial engineering in India. So that is where we come from. And we do have courses which takes care of like all the areas that I was talking about. So if you're talking specifically about algorithmic trading, so we have a couple of courses. One is 6 months course, which teaches all aspects of algorithmic trading using technical analysis, machine learning, quantitative models, and all that. If you're someone who wants to learn algorithmic trading only from like a technical analysis perspective, then we have a shorter course which teaches algorithmic trading only in context of technical analysis. And in all these courses, right, so for people who are new to Python or programming, right, what we do is when you join our course, we take care of your that side by actually giving you access to a basic Python primer module, right? The Python is something to be used in all the courses, as both Prasenjit and Anindya elaborated, because that's something that's like one language which currently is the most used language in finance. I mean, particularly all the advantages there. I'm not going back into that because they have elaborated already. But we use Python, and like for those who are new to programming, when you join the course, we give you access to a basic Python primer module, and that's like a self-paced pre-recorded module, and you can go through that module at your own pace and build your basic Python background. That has been designed with a very beautiful flow, and it doesn't assume any prior programming background. So if you go through that module step by step, you would have a decent hang of basics of Python. I'm not saying you will become a champion in a day. Programming takes time, as again both Prasenjit and Anindya said. The more you practice, the more you use, the better you get at it. But that basic Python module will at least give you an idea about the things in Python that you should know, and again, it would help you in understanding the actual course lectures when you are part of the course, right? And or else, if you want to only start small by learning the basics of Python, you can join this Python module separately as well, right? So, and then of course, I mean, if you want to go into the quantitative side of analytics and trading, then we have a couple of courses. One is a course on financial engineering, the certificate program in financial engineering, a very comprehensive course which deep dive into both theory and practical mathematical modeling for derivative valuation, risk management, and all these areas. We have a course called certificate program in quantitative finance and risk management, a 6 months course which deep dives into both theory and practical modeling for derivative valuation and risk management, right? So, I mean, not necessarily that you have to do our courses only. I mean, there are like a lot of other different courses. You can even do master degree programs. I mean, one of them, I mean, the universities, we also are partner with, like it's a Stirling University, their Asia campus in Ras Al Khaimah in UAE, right? So they have about master's degree program in areas related to finance, big data, and financial technology, that is fintech. So you may pursue courses like this, not necessarily only these courses. I mean, I'm not saying that like you have to do only the course that is conducted by IIQF or like in this kind of in Sterling University. But you can go through any good course. But the idea should be that the course should be very well structured, and it should actually be very lucid and take you through the step by step. And what kind of course also depends on, like, again, at what stage you are, right? But ideally it should be a course which takes you through the entire step, right? So that's ideal. I mean, otherwise you can do piecemeal as well. In today's world there are like plethora of courses which teaches all these aspects piecemeal. I mean, you can learn Python or programming from a different source. You can learn maybe small modules on mathematics, statistics from different courses. You can learn technical analysis from a different source, or you can learn maybe about derivative analytics and valuations from a different course. So from wherever you learn, it's up to you, your comfort, and I mean, it depends on like by what stage you are. But this is like ideally the way it should be, right? The learning first, you should, I mean, or rather, it should be parallel as well. I mean, if first the domain, and then parallelly you should be learning the programming aspect. Programming is something, if you want to do algorithmic trading, you should start learning as early as possible. If you're a student, you can start with your degree program if it is already not part of your course. If you have started working, again, you should start as soon as possible. If you're an experienced professional, then also you should start as soon as possible. So if you do it wanting to learn algorithmic trading, then programming is something which is like you should have started yesterday. So do it as soon as possible, and then gain the other body of knowledge, right? So that is about I mean, how you can go about all this learning and all these areas, how you should go about it. I am not I do have a couple of more slides to explain them in the algorithmic trading stuff and all that, but since Prasenjit and Anindya has covered that in all detail, so I'm not going into all those things. So yes, over the last 12 years we have had been lucky to have a lot of students from the industry and academia who have participated in our courses. Some of them have been kind enough to share their good experiences, so you can also all benefit from the courses, right? So yes, and with that we will move to the Q&A session. And in the Q&A session, actually, just before going into the Q&A session, just give me 1 minute of breather, and then we'll go to the Q&A.
My screen is visible.
Okay, you want to show something?
That's fine.
All right. So what I'll do is I will take up the questions one by one, and depending on the question, either of you can take up the question. Okay. So let me start by taking up the questions one by one. Okay, the first question was from Sandeep, and I believe we have taken up this question quite a bit during our session. He wants to know how Algo will help in trading. So I believe, Sandeep, that question actually is what we were discussing all this while. Anything you both want to add on that, what we have already discussed? Prasenjit or Anindya, you want to add anything? Sandeep asked, want to know how Algo will help trading.
To add, I'll say that the current trend in the financial market is that one should be able to analyze all forms of financial data. So when I say all forms of financial data, it is macroeconomic, which is the role of an economist, microeconomic, where the fundamental analyst operates, so in equity, and the technical data where the technical analyst operates. So when a mathematician and a computer programmer enters, he basically plunders these three roles flat out. So he can actually take these three types of data and create, let's say, reports, interesting insights, and even signals. And that actually should be the way. Because when we leave types of data out, for example, if I'm a technical analyst or just a fundamental analyst or a macroeconomist, I will be actually leaving the other parts of the financial data out, and which will mean that my insights will be half-baked, or it will be incomplete, or my signals won't be comprehensive. Now, to do all these things manually, it's impossible. So one needs programming to allow that to happen.
Correct. Correct. Okay, so now one very basic question from Aditya. I'm not sure if it is something you would like to take up here. So he asks, what is an open interest, or what is open interest? And he follows up with a couple of questions. But before that, again, do you want him want to explain to him very briefly of what is open interest? Because I mean, that's like a very basic question, but nonetheless.
Prasenjit, would you like to take it up?
You can go on.
No, it's fine.
Yeah. So see, in a very at a layman's language, see, there are stocks, correct, in the equity markets, and then there are derivative contracts. So if you are aware of derivative contracts, then there are two types of contracts popularly traded in India. One is a future contract, the other is an option contract, correct? Now, how it works in derivative is that you can say that it's kind of a proxy, but not really a proxy, but still, for like simplicity's sake, you can think of it like it, that in cash market you have volume, correct? So volume is what? The number of shares that exchange the hands, correct? Now in derivative, what happens is that there is no underlying asset which actually gets transferred from one hand to another hand. But what happens here is that based on the underlying asset, some two people meet up together, a buyer and a seller, and they all agree to buy and sell a contract based on that underlying at a particular price, at a particular future date, and with a fixed quantity, which is called the lot size. Okay. Now, once the player buyer and the player seller, once they meet and agree to trade at a particular price, that contract is now active. So they both promise to fulfill their obligations. Like the buyer will have the obligation in case of a future contract that he agrees to buy the underlying asset at a particular date, at a particular price, and a certain number of quantities. Now, similarly, the seller is also obligated to sell his stock at a particular date and price and the quantity. Now, what happens here is that the exchange ensures a counterparty risk assurance. So the exchange would take a certain amount of margin both from the buyer and the seller, but the open interest is nothing but that contract that actually came out, where because of these two people met and they agreed to enter into a contract, that is an open interest. If you still did not understand, then maybe you can Google a bit. It's not very difficult, and I'm sure that you will be able to find this answer. I don't know, I mean, it was a good answer or not.
No, absolutely. I mean, it was quite well explained. And of course, in case Aditya, you want to discuss this in detail, you can let me know, and I'll be happy to actually connect you to Prasenjit on India, and maybe you can have a little more. But yeah, for the sake of time, it was like a very good discussion. I mean, explanation. So Aditya has another question which maybe Anindya can take up, and he wants to understand that the codes that you showed in Python. So this code can be used in which platform? So that is his question.
So those codes, I presume, is he referring to the ID on which I'm coding? Looks like.
Yeah, actually, the question is that, like, again, see, he's asking that in which platform you can use the code. In the sense, it's not about asking about the Python platform. That once you have built the code, how you use that. That is what he's asking actually.
Okay, okay, okay. So see, it depends on the objective of the analysis. So that a particular Python platform, I said the IDE, that can be used to either generate a report or to answer a question which you have in your mind, or it can be used even for generating signals which can be integrated into the trading platform, and orders can be fired and monitored, etc. So the end use is wide.
Backtesting as well, just to add, like
Absolutely.
you can like you can use that filter, the scanner thing. So you can export the outputs into an Excel sheet and you can have it ready. Now just imagine if you can just link intraday data with it, and you can build an intraday scanner. So on a real-time basis also, there will be, just visualize like this. There will be an Excel sheet, and in that pop-ups will just keep on coming up, where which stock is in action right now, it will be all there. So you can use it in multiple ways, and what is the kind of program that you are using and how the output should be. And similarly, like the ones that I showed, like a report generator. So it's a flat Excel file. The other which I showed was, I think, that zigzag thing. So that is something which I don't want to publish anywhere. It is just for my information sake, correct? So I just want a simple output in the Excel. So whatever algorithms I showed you at the back end, so that algorithm will throw the results at the front end in an Excel sheet. So again, agnostic of the language, if you're using Python, VB, anything, I mean, VB is actually becoming obsolete, and like Python is the way to go. So you can crunch numbers, and whatever format is comfortable for you based on your objective, you can export the data. So you can even create 3D, plots, like GIF type of things, where a three-dimensional thing can move. So if something you are analyzing which requires a 3D visualization, let's say, for example, if you want to know what is the delta profile. Delta profile means an option contracts, the Greeks, how they behave with respect to the days to expiry and the spot and the strike price. So what is their behavior based, and also the volatility. So if you want to visualize in a 3-dimension, like how the overall curve looks like, so that can be easily done. And there are very advanced libraries in Python which enables you to put the data across in a plot in a very, very powerful way, much beyond what Excel can do. So I know for sure, because I have extracted maximum things out of Excel. So this Python thing was a new excitement for me, right? So next question, please.
Yeah, absolutely. So again, Aditya, he has also asked from where to start and what to start if you're not aware of about anything. So Aditya, I believe both Prasenjit, Anindya, and like myself also have elaborated how you can start. So we're not going into that question again. But yeah, if you want to discuss that in more detail, of course you can get in touch with us. The contact numbers are displaying, so you can mail or call us, and maybe we'll have a more detailed discussion on that. So Bharat has a question. He asked, "What is data source?" So I believe that also Bharat here, what Prasenjit and Anindya showed again, since this was in Indian market context. So essentially, the data source here they have shown was like the National Stock Exchange, as well as like they showed data from Yahoo. But yeah, I mean, it depends on which market you are operating. So basically, depending on like your market, it would be your exchange, your country exchange, or like data vendors that your country has. Anything, Anindya or Prasenjit, you want to add?
Yeah, just one thing, like there are a lot of brokers who are now giving you APIs. Okay, they are like bridges. So you can get data, raw data from them, and you can feed those real-time data into your algorithms to generate signals or trade, whatever. And the data sourcing could be many. If you are dealing with EOD data, NAC is a basic thing. Yes, Yahoo is slightly better if you are wanting an adjusted price data. If you are using high frequency data, if your strategy needs a high frequency data, let's say you're trying to monitor an order flow this thing. So your strategy is based on order flow. Now don't ask what is an order flow. But let's say if it is something like that, so then you need real-time data, and you can create your own book of how it is working, and generate signals from that. So it could be many data sources. So it all depends on what you're trying to do, and what is the best resource you have.
That's correct. The next question is from Arvind, and he says that we have not yet covered any algorithm in our session. So, Arvind, let me start answering that, and then probably I'll let Anindya and Prasenjit add to it. So, Arvind, see, basically, the idea about this session, I mean, first of all, like this was like a very short session of 1 hour, right? So, where we were trying to demonstrate how, as a trader, you could benefit by using programming, right? And not necessarily to show our prowess in how good we are at programming, right? So that was not the idea. So yes, Anindya showed the few example quotes that he uses, but of course we use a lot more than that. So as I said, the idea is not to show our computer programming prowess here. The idea was to explain to people how good programming is, or how much traders nowadays should learn. I mean, what is the importance of programming for a trader? So that was the idea. So that's why again we didn't go into that. Of course, you want to go into detailed algorithms and all that. So we do have more elaborate programs, detailed courses on that, where we take you through over a period of 6 months. So of course we go very deep into that. But this was just like a session to demonstrate from industry participants how they are using programming and why you should be learning programming. Anything, Anindya and Prasenjit, you want to add to that?
So yeah, I would just add this, that the why should be quite clear, and that's exactly what we try to address, because paths are easily accessible. Like IQF offers a number of courses. There are other institutes offering the number of courses, but as long as my why is clear, that why should I know programming, which is the basic building block of algorithmic trading. Now, what is an algorithm? Algorithm is a set of instructions. That set of instructions can be implemented manually. That set of instructions can be done through a computer. Now, in our presentation itself, the outputs had an algorithms inherent in them. Yes, we were now demonstrating backtesting algorithms, where we backtested and generated reports, but each one of them had algorithms inherent, a set of instructions inherent. But again, the idea was to demonstrate the why. If your why is now clear, that you want to, that you have enough reasons to learn programming and in a structured way learn algorithmic trading, the paths are in front of you.
True. Correct. So the next question is from Sandeep, and Sandeep asked, what sources hedge funds and investment banks use for FNO data, and what is the frequency of data collection? So yeah, I mean, again, just to start with answering that question, see, Sandeep, what sources, again, depends on which country you are in, first of all. I mean, and then second, of course, there are some common sources. So I mean, a lot of hedge funds and investment banks, they use sources like Bloomberg as well. Your exchange will be another good source of data. And then there are a lot of data vendors, depending on which country you are in. What is the frequency of data collection? And also maybe to elaborate on this, what sources hedge funds and investment banks use for FNO data? Maybe I'll let Anindya and Prasenjit add to that.
Anindya sir, can you just take that example of Renesas Technologies? So they are into HFT. If you are with Renesas Technologies, then maybe you are storing some, I don't know, terabytes of data every day, because they are like practically storing each and every type of data, not only price action data, but lot of other different type of fundamental economic and of course derivatives and all sorts of data to feed into their neural networks algorithms, and using machine learning neural networks to maybe do some HFT trading. I am not sure what exactly Renesas Technologies do, but probably that's what someone like a Renesas will be probably doing. And how do they store data? They all probably they have their own sources of data. So that would require a lot of infrastructure as well. But let's say if I'm not a Renesas technology, I'm a common retail trader, simple retail trader. So what could be my retail data source? First, as I said, if my strategy is something like an EOD based, maybe NAC is a reasonably good enough. Second, if not, you can use this Yahoo. If you have access to other data sources like Refinitiv or Bloomberg, I mean, you're free to use. And in case if you do not have any of such data source, and let's say you are an intraday trader and you want to create your own strategies based on some intraday high frequency data, so you can always use these codings and these algorithms, small algorithms, to store your own data. Maybe you can create your own 1 minute data series on your own, because if once you are getting a feed from the broker, and let's say you have an access to an API, so maybe you can store it at your own personal level, and you can create a data warehouse and test it. So that is how it can work. Because right now we cannot, if I don't know programming, it is very hard for anyone to even imagine that you can create your own data warehouse. But it is, trust me, very much possible. It is only that you need to be buying a lot of hard disk. That is all. And just a data source which is uninterrupted. And yes, you can of course create a primary data source out of it.
Yeah, absolutely. And like, what is the frequency of data collection? Would you like to add on that as well, something on?
Again, I mean, it's a very, I think, elementary question. It all depends on what you are trying to do. If you're trying to predict the stock price move for the next 10 minutes, I'm sure that you will be wanting a 1 minute data, nothing less than that. But if you are trading for the next 10 years, what will you do with 1 minute data? Correct. So there is a theory on this. This is my own self-observed theory, that in order to predict for the next 20% of the move, I need 80% of the data from history. So just visualize this. I mean, if you know technical analysis, let's say if you're trying to trade for the next 20 days, you're a short-term trader. So how much data do you need? You are trying to predict for the next 20 days. Okay. If I give you only a data for the next last 10 days, will it suffice? No. Now, do you need the data for the last 50 years only to trade for the next 20 days? No. That's again too much of data. I don't need that much of data. So probably I will need just about a year of data or so, maybe 7, 8, 9 months of data to be able to predict for the next 1 month. Correct. So this is what is a general framework that I have developed for my own models, and it is working fine with me. So it is something that you got to know out of joining this webinar for free. And because see, I keep on getting a lot of these questions. I keep on conducting these sort of webinars. So people ask, sir, I'm an intraday trader. What chart should I look at? 15-minute chart, 5-minute chart, hourly chart, EOD chart? What chart? So it is not about the chart. See, there is a very fundamental difference in understanding this. I'm sure many don't understand the difference. It is not about the frequency of observation. You are talking about a 15-minute chart. You are actually talking about the frequency of observation, which means you are ignoring the in-between price moves. So what you should rather ask as the right question is, if I want to predict for the next, say, 2 hours, so how much data I must be looking at least in order to have that some predictive sense in my model for the next 2 hours. So do I need 10 years of data to predict the next 20-minute 2 hours of move, or do I need only 1 hour of data to predict the next 2 hours of move? So probably I'll need at least 10-15 hours of data, right, to predict the next 2 hours of move. So again, broadly that 80-20 rule is there. So that is how it is. So it's not about the frequency of observation. You should ask, what is the length of data that I should consider in trying to forecast my trading window.
Right. So there are like few more
I
questions.
know. I mean, I sounded very confusing. I mean,
No, it was it was not confusing actually. I mean, yeah, you rightly mentioned. But like again, yeah, let's do one thing. I mean, of course, we have extended the time, but since like people are still there and they have some ask questions, so if you both are okay, can we extend for another 10-15 minutes and we'll quickly
Sure.
go through a few of the important questions?
Sure.
Is that
Sure.
okay with both of you? All right. So okay. So then like again, let me quickly collect few more questions and maybe over the next 10-15 minutes we'll wrap up by answering the important questions. So Cheyenne has asked, will learning Python be enough to get started on algorithmic trading? Again, let me briefly start this. So Cheyenne, I mean, this is something we have actually discussed quite a bit during today's session. So Python it's not about enough. That's the tool which you'll be using to do algorithmic trading. You need the domain knowledge as well, right? But yes, without programming, you cannot do algorithmic trading. So that's definitely a skill set you will need along with the domain knowledge. Anything you would Anindya or Prasenjit, you would like to add to that?
Just one more point here. See, any programming language is like a language itself. Now I want to become a poet. Okay, so I need to know at least some language, whether it is English or Spanish or Japanese, to be able to express my thoughts. So programming language is that. But in the first place itself, I must have the mind of a poet who should be able to think about poems, correct? So the challenge here is that it's not about whether Python is enough or not. The Python, forget about Python. It's not about actually any programming language. Later on, once you learn one programming language, you will want to learn actually C++, Python, VB, then your Javas and everything. Everything you will want to learn, because it becomes incrementally very easy for you to pick up the new thing. Now, what challenge is in my mind is that the ability to crack the problem. I showed you that zigzag logic. So you need to be able to think what should be my if then else loop and that logic, so that I can code that up into a program, okay, an algorithm. So just knowing the syntax is one primary requirement. You should be able to write words in English or Spanish or Japanese or whatever language. But as I said, the challenge is to be able to think that poem, the chain of thoughts. So similarly here, you should be able to frame that logic. What should be my algorithm in a pseudocode? I showed you the pseudocodes that is agnostic of any language. So that pseudocode you need. So once you have that pseudocode, you can code that in Excel also. You can code that in VB, you can code that in Python, you can code that in C, you can code that in anything, any alien language, anything. So you need to be able to think of that pseudocode. That's where I think the real learning will keep on happening. And with this, I also want to add that did I say that I feel that I'm kind of becoming more intelligent once I started to learn all these programming languages. I think I must have said. I keep on saying this everywhere.
You probably missed that today.
Your ideas completely go on a free flow. You are able to think of new things, because now if I did not know programming, my ideas will be limited only to an extent, correct? If I have never seen a spaceship, if I've never seen a rocket propulsion, then I'll never ever think of going to moon, correct? But once I have seen a spacecraft, once I've seen a rocket, what it can do, then I can actually think of even going to the Mars, if not sun. Okay, so that is the whole idea. Once you learn programming, your mind starts to visualize things in a completely different manner. You come up with new ideas, which your colleagues, which your peers, which your the ones that you are surrounded right now are not probably able to go beyond a point. So that is something like a real empowerment that you feel, a real power that you feel. And I cannot just explain you how much what it is like to be able to code anything and everything. You give me a logic, I can code it, and I can test it whether it works or not. You have an idea, I can just listen to it, and I can fine tune it. I can give you outputs better than even you can think, because I can optimize the parameters. Once I can optimize the parameters, I can see the results. I know, okay, so this is what it is missing. And I also have a domain expertise. So based on your original idea, I can actually come up with a better algorithm, and you will be left with nothing. So there are many ways that you can use. I can just keep on talking on this, but then we can go to the next question.
Sure. So Gagan has asked, one can do data crunching, but how one has to do trade using it? I mean, Gagan, this is also something we have explained, but just like maybe 1 or 2 cents more on India, Prasenjit.
Yeah, I can add. Maybe Anindya has something to say.
No. Please go ahead.
The data crunching. Okay. Now I'll try to answer your question with a question. How do you actually trade? What is the requirement? You need a domain knowledge. Okay. You have a raw domain knowledge. Now what? You need some sort of a mechanism in terms of what? The trading strategy, which is where your money management also comes in, your position sizing also comes in, your risk management also comes in. It's not about this stock will go up. It is that is not all about trading. You can just give some tips to people. That's it. But if you want to really make money out of the market, it is easy also and difficult also. It is a very subjective thing. Now, if I want to be a successful trader, then the common thing that I have seen in most of the people who have been doing it successfully for a very long period of time, the common thing was that they have a very crisp and clear rule in their mind, even if it is not fully coded, but they have a very clear rule. This is the situation, this is what I do. This is the situation, this is what I don't do. So they have a very clear set of rules. So that is a basic algorithm they have in mind, and most of them have already coded it. Second, you need also the principles of leveraging, whether at all, how much position should you deploy for any single stock, how many signals can you get at any point of time. It all depends on your logic and what algorithm have you devised. So there are various factors. Once you combine all these things together, then that is what creates a complete algorithm of trading. Okay, so I think this answered the question.
Yeah, absolutely. So the next question probably is for Anindya. So Ashok has asked, what is the percentage of algo trading in USD INR? Would you have some idea about the statistics on that?
I don't have the exact statistics, but it's increasing dramatically on the exchanges, because on the OTCC, USD market is of two types, actually three. One is the OTC market, the interbank market, which is inside India, the onshore, which we call. The other one is the NDF market, which is offshore and the exchanges, and again in the OTC. And the third is the on NSE and BSE. So on the NSE and BSE, the percentage of algorithmic based decision making or order execution or both is dramatically going up, especially in the options, because options are dominating the entire FNO. And there it is algorithms which actually is now gradually dominating, especially from the market makers, from the prop houses, because they are extremely active on the option selling front. So they do it algorithmically.
Yeah, that's correct. And just to add, actually, I mean, outside India, in more advanced countries, the proportion is even more, right? So in US and all, probably for currency trades and all, it's like more than 60 to 70% of the trades are through algo. Anyway, like next, going to the next question. It's a very interesting question, actually. It's from Guru, and he has asked how this would help a small retail trader like me. So would either of you want to answer that question?
Right. I'll just start and then Prasenjit take it from there. Yeah.
Sure.
So see, whether you are an individual trader, you are employed with a company, what has been my experience of 18 years being in the financial market is that there is large nonsense and very little sense, because a lot of the information which people vouch by, they don't understand what is a fact and what is an opinion. A large part of the fact being brandished is opinion, and that opinion unfortunately has been formed based on no or half-baked primary research. Now why? The reason being, we are at an age where information is almost becoming free, and it's being at an alarming volume and speed. Now, for a human being to crunch this kind of data, it's becoming nearly impossible, right? But the financial market is not going to wait for you, because in a financial market, you're up against the best. You're trying to snatch money from the best. So it's not what you, it's not what you do, it's how you do it that matters. And there, if you are trying to make money from a hedge fund, let's say Renaissance Technologies, as Prasenjit talked about, who is 24/7 using all kinds of ways to crunch all kinds of data, then to make money from his hands, you better have something which is at least at par or close to that. So how do you get there? The first step is to use programmatic way of analyzing the data, because then what's going to happen, it's been my experience, a lot of the things, let's say for example, this I actually experienced. One day, one of our senior clients here, he came and said that USD/INR, if it closes close to the high of the day, it means that it's going to open higher the next day. Now, when I didn't know programming, it was either I had to accept it or I had to just contest it without any proof. So when I knew programming, all I had to do write a few lines of code and I could know. And the output is not important. The output was that it's not a signal, it's garbage. But the output is not important. I could test. So this is the power. In trading, if you can actually sort out the garbage from the signal, your half job is done. Now, Prasenjit, if you would like to add.
Yes, very rightly said. 90% is the total data has two parts: information and crap. So 90% is crap. Only 10% is meaningful information. Now, for example, let's say I have a strategy in mind. I want to sell straddle. ATM straddle I want to sell every month, starting of the month, and I want to see what happens. So I feel that if I sell a straddle and if market doesn't move 10 out of 12 months much, and I believe that that is how it is, so I'm going to be making money. So what I do is, without even testing, I simply start selling straddles, and you can really not be sure what will be your outcome. Correct? So maybe you will be making money for a few months, or maybe I don't know, but at least, do you really want to be doing something which is completely untested just based on your gut feeling and common sense? Not really. Because if you are trying to do that, I'm someone who will just write this code right now and I can show you the results upfront. If you sell straddles, weekly straddles, let's say index options, they have weekly expiries, and if I sell the weekly options every week on, let's say, Friday or the Thursday for the next Thursday, expiries happen in India. The weekly option contracts for the indices are based on weekly. So if I pick and if I want to sell the ATM straddles, then I want to see what is the result. So I can just quickly code it up and see what is the outcome and what will be my probability if I keep an X percentage of stop loss and Y percentage of target. So I will have a better understanding of what I am doing. So see, again, connecting to the question earlier, when you are trading, it is very important to maintain discipline, and discipline doesn't come for free. You have to have that solid backbone. If let's say if I have a problem in my heart and I go to Nitish, he says that, okay, Prasenjit, you have a problem in your heart and you need to do some bypass surgery. Will I do it? No, he says that no, if you don't do it, you will die. I will say, forget it, yeah, I'll die. It is better. But who are you? Why will I listen to your advice? But now, if Debi Shetty, who is one of the top surgeons in India, if he says that you have a problem in your heart and you need to do that operation, I will do what I will say. I will say, sir, please do it right now. Because I know if this guy is saying that if I have a problem in my heart, I really have a problem in my heart and I might die. So why did I take this decision? Because I am listening to an expert. So here, my expert commentary will be the data backtest behind. I mean, the backend results. Of course, historical results are not a guarantee of what is going to come in the future. But if you have devised your strategy and backtesting logic in a very sensible manner, in a structured manner, then it is the best thing that you can do at least. Correct. So something which is at least you can do in your hands, you should be able to do it, and you should be better doing it rather than putting your real money in the market and losing it and complaining that markets are very unfair and the big institutions, they always trap the retail. So institutional people, they are not gods. They just have certain skills which are not there right now with you. Gain those skills. If you think only 2% of the people are making money in the market, so let us be in that 2%. Who is stopping us? And trust me on this, and I'm a very firm believer that markets you can make money. You just need to have that belief and that conviction and that passion to just go after it. If you leave it in between, you are going nowhere. Everybody is competing with everybody. There are ideas, there are people from Harvard and I don't know, from NASA. Let them be, but at least I can't be a complete fool with lot of money and putting my money in the market. So before putting your money, investing your money in the market, invest some time in the books, in reading, in learning, in all these things, these technological things. Earlier, reading thousands of books would have done your job, but right now, if you read whatever books, it won't only serve your purpose. You have to be able to become more advanced, because everybody else is doing it. If you are not doing it, you are being left outside. So you have to catch up with the game. And as Nitish or Anindya already said, it was yesterday, when was the right time. So if we start doing it now, then the ability as a retail trader I will have of institutional quality. Do you want to make money like an institution or not? If the answer is yes, then we have to do whatever best we can. Whatever God intelligence has is given by the God, we'll make best use of it. I don't want to die a person who was who used only 0.001% of his brain cells. So let's use whatever resource we have to the best of our abilities, and not really complain about, okay, I'm a small trader, I don't have much money. Let us give it a shot. And who knows, you just strike a fine logic and you start making money. I've seen a lot of people who have been testing it, nothing happening for 3 years, 4 years, and then suddenly in 2 years he makes crores of rupees, tons of rupees. He just hit the jackpot. It happens. Perseverance. Market is all about that. So we don't need nerves of steel. We need that commitment. I think I was getting in that mode. So I think pretty much I answered it all that I could.
Yeah, and more than that actually. So I mean, the next question is on a similar line, but maybe I'll just add a couple of cents to answer this question, and then we'll move to the next question. Aditya asked, do you think now the algo is the future, and a retail trader must learn algo trading to stay in the market? So Aditya, as Prasenjit and Anindya has both elaborated on the last question, I just want to mention one more thing. See, it is not about whether algo is the future, past, and all that. First, again, it is about the advantage. So as a trader, if you have an additional advantage, you should take it. Why not, if it is available? See, if you'd have asked me about 5 years back, algo platforms were not available that much to retail clients. So I would have said, if you learn and if you are going to work in advanced trading desk, then it's fine. Otherwise, the retail client, you do not have much avenues to do algo trading. But now, like every broker has started giving platforms to algo clients. Algo platforms to retail clients, right? So first of all, why not use it? Because of all the advantages that both Prasenjit and Anindya has elaborated on. Second thing, again, about the future. See, I mean, this is my personal opinion, and maybe of course a lot of studies have also been made. More and more people, when they start using algo or computer programming to trade, particularly for short-term trading. I mean, if you're talking about intraday and below, right? Intra-hour, intra-seconds, or intra-minute kind of trading, right? So if somebody is trading using an algo and you are trading manually, right? When if you are competing with a computer program, then of course it will going to be difficult for you. So at some point of time, I'm not saying tomorrow, or I mean, or at what point of time, maybe it will be 5 years, 10 years down the line. So at some point of time, maybe for short-term trading, yes, algo trading, the way it is moving, as more and more people start using algo, you might say that like algo trading is something which has to be learned. And as I said, I mean, if the opportunity is there, why not? If trading is all about taking advantages, the more advantages you can build in, uh, again, the more money you can make. So simply, I'll go to the next question actually. Anyway, like we are already 40 minutes more than the allocated time. So maybe we'll take like a couple of more important questions very quickly, and then we'll wrap up the session. Okay, and those who are asking about the course details, the course details, we will individually get in touch with you all and discuss about the queries related to your course questions, about the duration and like the course fees and all that. I would not like to bore the audience with all those details, because a lot of the other people, they're already been like 40 minutes past their allocated time. And in any case, they might not be interested in knowing about that much detail about the courses. But those who are interested in the courses and course-related queries, we will take it up individually with all of you. One of our representatives will call and discuss the courses, right? Murli question is free data sources. So Murli, we have already dwelled upon that. Free data sources depends on like what frequency you are talking about. Till minute by minute data, there are a lot of sources which is like free nowadays with exchanges and like Yahoo and all that. But of course, if you want to go beyond, tick by tick data and all, that is definitely not free. There are a lot of sources, but you have to definitely pay for it. Okay, now going to the next question. Can you talk about proven techniques that works most of the time? This is a question by Biswanath. I'm not sure is there a ready-made answer, but yeah, just like I would like to hear from Anindya and Prasenjit on this. Can you talk about proven techniques that works most of the time?
Anindya sir, please. What do you have to say on this?
Say two things: hard work and hard work. That's all. And if there is something to make money, I wouldn't be sharing it here.
True.
That is for you to find out.
Yeah, jokes apart, trading is like a industry where unfortunately every trader would have to work his way out, right? Of course, that does not mean that you have to build the wheel from the scratch. There are a lot of standard things first you learn, and then you have to use that knowledge.
See, we can just interrupting, like we cannot talk about what works and what doesn't work in the market, correct? So we are not here to sell any strategies for some cheap shots. But what we intend here is to talk about or give you the direction how to make money. What works in the market? How do you find that? Forget about one strategy. Even if let's say talked about a particular strategy, let's say if I give you my algorithm, which I'm using right now, what will you do with it? After 5 years, it will stop working. What will you do then? You'll come back to me again. No. So I'm trying to give you a permanent solution. You are asking for a one-time solution. Which one do you want? So I think that answers from my part.
That's correct. That's correct. So permanent solution is like, there are resources to learn both the domain, the programming. You have to, yourself like figure it out what to learn. Of course, if you want guidance, there are people like us to guide you, and like and then guide you in a best possible or in a short period of time how to make a start. But that's about the start. Then the journey is still yours, right? You have to use that start to build on that, right? So now going to the next question, can a person with zero coding knowledge can learn this? Dheeraj, yes, Dheeraj, as we have mentioned, yes, it is possible. Of course, your journey will be longer, right? So it is very simple. Programming is like a kind of body of knowledge which you take time to get expertise in. So it will not be in a ziffy. It's not like that you do a course in 2 months and then you become a champion. It doesn't work like that. But what happens is if you do through a course, then again, on your own, your learning could have been like maybe 1 year, 2 years. A course can give that much of learning in maybe in a short span of time. But then again, then again, you have to keep on using that to hone your skills, and that will take time. So if you already know programming, that's like, I mean, of course, it's very simple that if you already know programming, it's easier for you. But if you don't know programming, that doesn't mean that the life ends. You can always learn. And nowadays, what has happened is like those traditional way of thinking is gone, right? So essentially, the way the industry is moving, every field is moving, right? We are having very different kinds of things that are used, different tools that are used. Who would have thought maybe 25 years, 30 years back that we would have used programming to trade? Particularly, even if you talk to an Indian trader who would have been heading a trading desk in a proprietary desk, probably he would have been very happy doing his simple BSc NSC arbitrages, right, manually, and he would have been making tons of money. But basically the things keep on changing, and nowadays, like the new body of knowledge that are coming, the new tools that are coming is coming at a very frantic pace. So even the tools that were used 5 years back, those have changed. For example, right, 5 years back, or maybe like 6-7 years back, R as a language was more predominantly used than Python in all our kinds of financial analytics and statistical analysis. But now you don't see that much of R. You see Python. Tomorrow something else will be there. So if you want to be in the game today, actually anyway, like the learning has to be continuous. So those period is gone. You have done one degree, and then like again you use that knowledge that you gain from your degree to make your entire career. That kind of thought does not work. So everybody actually has to keep on learning something or the other new, because the industry is changing, right? So essentially you see a lot of machine learning is nowadays used, which is becoming all pervasive. A lot of blockchain is something which is getting used in every industry. So these are all new fields. Even when we started out in the industry, right, these things were not there. So we all have to learn that, right? So it's not like that. I mean, it's that I mean, if you have a programming background, of course it helps. But if it doesn't, you have to learn simply. It's about how bad you want to do that. Okay, so Prasenjit or Anindya, I mean, we'll go to the next question. Sorry, I mean, we are actually already having a paucity of time. So maybe there are one or two more important questions, and before we end the session today. A lot of the questions are like little repetitive. How we start programming, how we build background, those are things we have discussed quite elaborately. You have our contacts. If you have more questions, if you want to discuss in more detail, feel free. We'll be happy to help it out. Okay, so one question probably I'd like to take is, I work in the IT industry, but I do not have any finance knowledge. Can you let us know about trading setup? Okay, so let me also start answering this, and then I'll pass on the question to Anindya and Prasenjit. So again, same thing actually, Nitin. The thing is, just like we were talking all this while about how you start programming, the learning programming. So it's like the other way around for you. You are in the IT industry, so I'm assuming that like you already have like a good programming knowledge and exposure, right? So it is about learning the other side of it. I would say, fortunately for you, learning about the basics of finance is relatively easy compared to learning the basics of programming. See, I mean, I always tend to think that there are two kinds of subjects. One are like subjects which are basic subjects, and one are like derived subjects. What I mean by basic subjects is like basic subjects like languages, and I include programming languages in languages, as Prasenjit actually elaborated, right? Again, it's like also a language which you use as a tool to, just like you write poetry and like you to do work with programming. I mean, computers, you learn programming, right? So programming, languages, mathematics, statistics, these are body of knowledge which I consider basic knowledge. Subjects, and these are things which takes more time to learn. If you see that you have been learning mathematics from your kindergarten, right? So essentially you have learned it over a period of 15-16 years in your school, and then like again in your colleges and all that, right? But there are certain subjects which are derived subjects like finance, economics. These are subjects which are relatively easy to learn if you have the basic subjects in place. So if you have knowledge about language, if you have knowledge about mathematics, statistics, logic, which you have, I mean, you may not have learned directly, but your education and all that builds all these things, right? So then you tend to understand these derived subjects right, in a little short span of time. So I'm not saying that like again it would be like no effort, but what I just wanted to mention was that for you it is relatively easier compared to somebody who is new to programming, right? Of course you will have to learn the basics of Python, basics of finance, all the body of knowledge that would be required, and it will also take time. So yeah, you'll have to start from scratch. Maybe a course like us can help, where you can give a head start, and then you build on that. Okay. Anything, Anindya, Prasenjit, you would like to add on this?
No, I think you pretty much answered it well. And let's take just one final question and wrap this up for the day.
Yes, yes, I was also planning to do that. And so Akash has asked some good books for research and knowledge for understanding market strategies for intraday and swing. Uh, would you, I mean, what I'll suggest is this is something maybe you can send me an email with some suggested books, and maybe we will include that in the material while we are sharing as like suggested books, because books there are so many, Akash, that's like very difficult to suggest, but maybe like Prasenjit and Anindya can suggest like maybe 2-3 books each, which somebody can use to start about learning about market strategies for and like maybe about start about algorithmic trading as well.
Sure, absolutely.
Okay, so I think that's pretty much about it. Okay, one quick question is like how to pick best indicator. This is a question from Gautam. Prasenjit, would you like to answer that like in a brief way before we end the session? How to pick
What is
best
the
indicator?
question? Sorry, what is the question?
How to pick best indicator. So he is meaning technical indicators.
Right. So how to pick best indicator? So what it depends. See, what do I want to do? Right. So actually, it's a very interesting question and then very important question. Because see, generally, when you think of designing a strategy, what mistake people do is that they try to kind of use brute force, like pure raw programming power, to crank numbers here and there, left, right, center. You know, you read few books on technical analysis, you get to know about a lot of indicators. Okay. Now, once you have that basic idea about the indicators, you know coding, you want to punch codes, crank out numbers, and you don't stop until you get some kind of a number in the Excel, which looks good on the Excel. Correct? And obviously, if you hard enough and if you're lucky enough and if you would have done this multiple times over months together, then you will eventually there is a possibility that you will come across with some combination of indicators which look good on the Excel and they seem to be very promising. But that is actually not the way. First of all, you have to observe a particular phenomenon in the market. So you don't trade indicators actually. Mark my words, you don't trade indicators. You trade a particular phenomena in the market, and in order to be able to capture that phenomena, you need to pick and choose an indicator. So that indicator could be available in the known list of indicators, or it may not be available. Like for example, I built a model on measuring market sentiment, because I feel price moves are a function of three things: fundamental, liquidity, and sentiment. So fundamental information, be it technical price action data, whatever, you get a lot of data sources. You have, I don't know what is the way to understand liquidity factors or measure liquidity factors, but there are few efforts done in the past to measure sentiments. Okay, like using market bets, PCR and all that. So there are quite a few which I had read in my CMT curriculum, and as always, like I try to use and figure out if something worked or not. But then I felt that it is not what works in the market. So there was a particular phenomena that I took as a leading point, and that phenomena was when in a healthy market the sentiment remains positive, and as long as it remains positive, you will keep on finding breakouts, and those breakouts will play out well. So I'm just going to repeat: if the underlying sentiment is positive, then the breakouts happen and they work out well. But in case if you saw a breakout and lot of breakouts which took place maybe altogether, and then suddenly those breakouts started to kind of fail, so that's when there is a change in sentiment. Because when I was putting in calls, generally my calls will just not go wrong, okay? And then suddenly something happened when I would see that suddenly all of the stocks which I just recommended are not moving. So this happened quite a few times, and then I saw that the markets kind of took a U-turn after a few days, maybe just 2-3 days or a week. So it happened over a period of time, quite a few number of times, and then this was my basic general understanding of how things work. So that is where that sentiment thing got connected. So the dots were like connected back, like that. So that's where I realized that there is a requirement to measure if breakouts are happening and how many breakouts are there in the market, and if there are no breakouts. So for example, if the markets are very strong, then you will see that there are a lot of breakouts you are able to figure out on the charts. But in case if markets are likely to remain flat, then obviously there are not going to be any tradable formations, correct? So as a trader, if you are finding breakouts and you're taking the trades, you are making money, you are in for the next trade, and you keep on doing this until when you get stuck, correct? So once you get stuck, you don't want to take any more bets. You want to come out of your loss making positions as quickly as possible or with minimal losses. So that's where this sentiment thing came up to my mind, and rather than going the other way around, I had this hypothesis first in my mind that I need to be able to measure sentiments. And how do I do that? By measuring the number of breakouts and which are successful, or the breakouts which are failing. Now this is where the concept of indicators later came on, where now I'm thinking that okay, this is the phenomena that I believe that works in the market. So if somehow if I'm able to measure how many stocks are in the breakout mode or not, then that should give me a good idea about the overall market undertone. So in order to do that, I chose a very simple two indicators. I used a momentum indicator and an oscillator. What combination? How? That came later. So the first was the phenomena that I wanted to trade or to track, and then I should think about what indicator is the best one to capture this particular thing. So as I said, that indicator could be available or it may not be available. If it is not available, if you understand what data to track, you can create your own indicator like I did, and it is working phenomenally well. Let me tell you, it's like a fire alarm which is with kind of almost 90% accuracy. It has been able to tap the major market turning points. Okay, so that is the whole point. Like, you think about a particular phenomena, you first analyze, evaluate how it works, then you think about the indicators, what indicators can perfectly define your or address your problem. Okay, and the third step will be to code that and maybe optimize the parameter values to find you. That is how it should be. So winning strategy, I mean, this is the way to find out. I think so. This is it for the day.
Yeah, that's it for the day. And just like one more thing I would like to add here, actually, Kam actually has also come. I mean, he was part of your CMT group as well. So he asked, like, if a person wants to be a good algo trader, must he become a good technical analyst first? Kam, again, just very briefly before we end the session today. So essentially, what body of knowledge is unimportant, right? So essentially, more knowledge you can get, the better it is. I mean, you can understand technical analysis, you can understand fundamental analysis, you can understand quantitative analysis, you can understand machine learning. So the more you know, and the better you can combine all those body of knowledge. So essentially, it is not about only one thing. I mean, as I said, more you learn. So yeah, technical analysis is like a good way to read the market, but that's not the only way to read the market. And
I think I have slightly different opinion here. Actually, it's a circular loop. It's a circular loop.
Okay.
Once you understand markets better through these data mining, data crunches, That is what makes you a better technical analyst. So whether you should get deeper insights to become a better technical analyst, you can only become a good technical analyst or a better trader once you have those edges that we talked about in the presentation, right? So unless you get those insights, you cannot become an average person, an average better than the average, correct? So the circular loop is that you again cannot become a better trader once you do not have the these indicators in place or these tools in place. So you have to learn programming or learn technical analysis. That's like a circular loop. So you become a better analyst once you learn programming. You become more, gain more knowledge in your domain.
Yeah, that's correct. That's correct.
Right.
So anyway, we have a very engrossing session. There were a lot of questions. I mean, thanks to both of you. You answered all the questions very patiently. We are about an hour more than the allocated time. So thank you once again, Anindya and Prasenjit. It was really a pleasure. Thank you so much for sharing all your insights. It was like very, very knowledgeable.
It was a pleasure.
Thanks to all the participants also. They have been very patiently hearing. So it must have been an interesting session. So the people are still there. So, but thank you everyone for taking your time out on a Saturday and being with us, hearing us in this webinar. See you again in the next webinar. We would be having another one coming up in a couple of weeks where we would talk about more insights on the markets and all. We'll share the details with you. So see you again in the next webinar on 3rd of September. Thanks Anindya. Thanks Prasenjit. Thanks everyone.
Thank you so much. Bye-bye.